Kailey, Leinz, looking back on May, I have to say it didn't feel like a flat market, but on the S&P, that's what we got.
Yeah, literally almost exactly unchanged on the month of May, even in spite of all of the volatility we saw over the course of the month, John. A whole lot of drama to go basically nowhere. The question now is, where are we going to go in June? Because as you were just discussing, finally the start of QT, persistent growth and inflation concerns, a war still raging in Ukraine, fueling those. Not a great cocktail heading into a month that historically isn't great for the equity market. On average, since the year 2000, June has brought with it a decline of about 0.4% on the S&P 500, the third worst month out of the year. And we have to consider how far we've already fallen coming into this month. The S&P 500 down about 13% year to date, its worst start to a year since 1970. And looking back at starts that rough over the course of history, 4 out of the past times we've seen losses of that size by this point in the year saw the index end the year lower. Interestingly, the one exception was in 1970, but even then it only closed higher by about 0.1%. And of course, back in 1970 and the years following it, we know that there was a pretty sizable inflation problem in the U.S. economy. We are facing an inflation problem in this moment as well. And in part, that stems from higher commodity prices like oil driving up gas prices at the pump for American consumers. And that potentially is poised to get worse with inventories at 50% of normal levels. And they tend to fall in the summer driving season as it is. So that could mean more price pressure on consumers who may start to change their behavior, become less tolerant of higher prices. That raises the question of the ability of companies to exercise pricing power to retain profit. That comes back to earnings and the fate of this equity market, John.